Welcome to This Explainer. Today we are unpacking some incredibly eye-opening source material that reveals a silent, totally invisible enemy sitting right there inside our wallets. It's a tool that, for literally millions of people, is quietly stealing their wealth, creating massive stress, and basically keeping them poor for years. We're going to explore the hidden mechanics of exactly how this debt traps us. So let's dive right in and uncover how the credit card trap actually works.
To truly understand this trap, I want you to picture a very specific scenario. Imagine you're standing at a checkout counter in a store, and you're planning to buy something that costs exactly $100. Now, if you had to reach into your pocket, pull out a crisp, physical $100 bill, and actually hand it over to the cashier, you'd likely feel a real, tangible physical hesitation. You know the feeling, right? You'd pause, look at the item, look at your hard-earned cash, and ask yourself, do I really need this? You'd probably think twice before letting that money go.
But man, when you whip out a piece of plastic, something fundamentally shifts in your brain. With cash, there's a literal pain of cash. You are physically watching your money disappear. But credit cards, they completely separate the immediate pleasure of buying from the delayed pain of paying. It's just a quick, totally painless tap. You swipe, you grab the product, and it feels almost entirely harmless because, well, no money visibly leaves your pocket in that exact moment. There's no immediate sacrifice. You get the reward right now, and the cost comes later. Which brings us to part one. The psychology of swiping, and that mental separation we just talked about. To see how this really plays out, we have to look at the hidden business model of the banks. A lot of people just assume banks make their big bucks from annual fees. But honestly, that is just a tiny piece of the puzzle. The real money comes from interest. If you pay your balance in full every single month to the bank, you're actually an unprofitable customer. They don't make any interest off of you. Their ideal customer is someone who keeps borrowing and carries a balance month after month. Every unpaid balance is a source of profit. The longer you stay in debt, the more money they earn. They literally want you trapped in a cycle of generating interest for them.
Let's move on to number 2, the minimum payment trap, and how a balance starts growing.
The truly terrifying thing about this trap is that it usually starts out completely innocently. You aren't out there buying a yacht. It starts with small, everyday purchases. You know, a new phone, maybe a weekend getaway, some nice restaurant bills. Nothing extreme. But little by little, the balance grows. Then, your monthly bill arrives, and instead of paying the full amount, you notice another, much friendlier-looking option, the minimum payment due. It might be just a tiny fraction of what you owe, maybe just $25. This tiny number tricks the brain into feeling like the debt is harmless and completely manageable. But making minimum payments is one of the most expensive financial mistakes a person can make. While you're paying that tiny $25, compound interest is aggressively accumulating on the rest of your balance.
So many people don't even realize they're running on a financial treadmill until they're totally exhausted. I absolutely love this quote from the source material because it hits the nail right on the head. Imagine carrying a bucket with a hole in the bottom. No matter how much water you pour in, it keeps leaking out. That is exactly what debt feels like. You're working hard, you're making payments, but because of compound interest constantly working against you, you are barely moving forward. A $1,000 purchase can end up costing thousands more over time. And because it happens so gradually, you don't even notice the damage until you're well and truly stuck.
All right, part 3, the cost of present bias and our love for immediate rewards. This perfectly explains why we do this to ourselves. Present bias is the psychological tendency to value today's pleasure way more than tomorrow's pain. Our human brains are literally hardwired for short-term rewards. Buying something right now feels absolutely fantastic. Saving money? That feels difficult. Investing feels, well, kind of boring. We want the immediate gratification. But the harsh reality is that while our brains are built for short-term rewards, actual wealth is built through long-term thinking. And you better believe the credit card industry understands present bias perfectly. They actually weaponize it against us using some very specific tactics. Think about it. Reward points, cashback offers, special promotions, those buy now, pay later options you see everywhere online. Every single one of these features is scientifically designed to trigger your present bias and encourage you to spend. Because, as we established earlier, your spending is what generates their profit.
Now, I want to be super clear here, and our source material emphasizes this neutrally. Credit cards themselves are not evil. In fact, responsible users can absolutely benefit from them. They offer amazing conveniences like fraud protection, travel benefits, and they help you build a solid credit score. The problem isn't the card. The problem is human behavior. A credit card is essentially like fire. It's incredibly useful when controlled, but highly destructive when careless. The real danger lies entirely in falling into that careless cycle of spending, borrowing, paying minimums, and racking up interest.
Let's look at number 4, assets versus liabilities and how we approach debt. See, wealthy individuals approach debt very, very differently. They understand a core rule. Consumer debt makes you poorer, while assets make you richer. The poor and middle class often use debt to buy liabilities, things that literally lose value over time. We're talking cars, electronics, fast fashion, luxury items. Essentially, they're spending money to look rich. But the wealthy, they focus their money on acquiring assets, businesses, real estate, investments, things that actually generate income or appreciate over time. They use their money to become rich, and that simple difference in thinking creates dramatically different life outcomes.
So how do we get out? Here is part 5, escaping the trap, and how to finally stop the cycle.
Our source material lays out 5 exact, actionable steps to stop feeding the debt machine. Step 1. Stop carrying balances entirely and pay the full statement amount every single month, no exceptions. Step 2. Create a budget. Seriously, if you don't tell your money where to go, it's just going to disappear. Step 3. Build an emergency fund. This is your financial safety net for things like an unexpected medical bill or a blown car transmission, so you don't have to fall back on a credit card. Step 4. Pay off your high-interest debt aggressively, because every dollar you use to eliminate expensive debt is basically a guaranteed return on your money. And finally, Step 5. Develop a wealth-building mindset.
And what does that wealth-building mindset actually look like? It comes down to this really powerful idea. Wealth is not determined by how much money you earn, but by how much money you keep. A credit card doesn't make a person poor. Poor financial habits do. The card is just a piece of plastic, right? The real battle is happening in your mind. Every single swipe you make is a decision. Every dollar can either build your own future or it can finance a bank's profit margin. True financial freedom requires the awareness and the absolute discipline to think differently from the crowd.
Which brings us to our final slide, and a really transformative question I want to leave you with today. If you genuinely want to escape the trap and build real financial freedom, you've got to stop asking, what can I buy? And start asking yourself, what can I invest in? The very moment you stop borrowing from your future and start investing in it, everything begins to change. Thank you so much for joining me for this explainer. I really hope this deep dive into the credit card trap helps you keep a whole lot more of your own wealth. Catch you next time.